Welcome to TradeTheMBI.com. This is John. This report is for the 28th of February. And look at that, just as we were talking about it. You know, we saw in the pre-market this DOC fade here of the green below the red as it was opening up, shorts rising into the setup. Even though we had rising shakeout in that, it just meant that we were likely to see, because we had seen this overbought where we might, it wasn't quite red, but it was very close to it here in the yellow. And I was suggesting that at least a 50% retrace into that, or even a little bit more. And in this particular case, it just filled it all the way back in this single day. So everything that was bought up in that move retraced right back down. You gotta love it when that happens within a day. I mean, things really changed that dramatically overnight. No, it just was a breakout of the range, and oftentimes those are filled right back in. A lot of people will just put that line right here. Breakout happens, everyone gets excited, and then it's faded right back into it, because that tends to happen when highs, particularly in range, are broken out. You usually revisit it. Sometimes you even come back into it before moving on from there. So it was quite interesting to watch, but we could see it happen beautifully intraday. It was some nice charting to be able to post up. It hasn't impacted the overall shakeout reading in that, but clearly we got to see here on the NASDAQ, our expectation is for a little bit more, because it has broken out of the range a little bit sooner and was much closer to new highs. So we expect that the NASDAQ would suffer a little bit more to begin to even things out just a bit. Euro came right back down to there. We just talked about that and how the euro had gotten way out of the range that was comfortable for the ECB, and certainly wasn't in the cooperation zone down here. That the expectation keeping it under the 120 range that had been worked out for many years. Amazing when you don't fix things and you let them go on their own. Certainly gets a little wild. TLT, again, this is going to be that fluctuation with the battle of interest rates. How soon will someone act? You can see mortgage rates have already started to rise, that already put a crimp in new home sales and that. So it's probably going to fluctuate a little bit. We've gotten reset here for midterm buyers in that, as well as, the steel is still elevated. So not expecting a whole lot out of anything here. In fact, looking at the red, minus 12.87, which means it's broken above the negative 13.5. So that's some, buyers, because treasuries are safe. And when you have market down days, people tend to flock to them. So you would think that should have been much bigger than it was. So not exactly terrific. Oil filling back in towards the ABM. That's all. Nothing too exciting. You have DOC spread there. The steel coming across, so everything from a buyer's standpoint moving out. So it's just a lot of people getting out of Dodge, so to speak. And when that happens, when you get that kind of move, you sometimes break down, and this is what happened right below the ABM green. And not too unsurprising, we just haven't seen any midterm support whatsoever for gold once we got the break below the ABM yellow right back up here in this first DOC spread short. And it's paused for a little bit, but finally broke down a little bit more there and has reached the oversold, filling in all those positive extremes from before. We would have to go all the way back here to capture some unfilled positive extremes. So that would be what I'm looking for next chart. That we look at Bitcoin after it was suffering well below 10,000, and then we got the announcement that Coinbase and some of these others were going to be releasing IRS data that caused a bit of a premature. And then, of course, you get the Goldman jumping into it, saying that they were going to be involved in supporting it, which, that's a major market player. And in doing so, it definitely propped things up. Clearly, though, we can see our buy signals, no issues with that, from the cyan moving below red, and or even the orange dip below, where you break into the new zone. That happened a little later. Even if you wait to the 23%, which I don't have any objection to, you're still catching it down at that 9,500 range all the way to the 10.7. So, these are good $1,000 moves on those setups. Let's shrink the 5K just a little bit because it was kind of fun. Started off pretty anemic. There really wasn't anything happening. We had the pre-market move rally up, and usually that fills itself back in with the positive extremes that take place right here, and did more than that. Actually even came to the 50%, just kind of floated across for a while. Actually made it back to new market highs on this little buy that took place late in the move, and it shot up and then produced immediately a DOC spread, which tend to be fairly strong at that particular point. When you have that kind of move into strength that's immediately sold into, there's a clear sentiment change. And at that particular point, even from the ABM gold up here, you're at least looking to get back down to the 50%, so 27.85 range, and the 50% move is down here at 81. So this is decent space, and then once it got to there, you had no improvement. I mean, orange caught right between the two, and just a complete cascade lower, and so that just hit the lows and then made new lows going through. And every pop back you got right near at the 50%, even if you wanted to cover that, you could have at the 23, produced another signal right about the same spot here. And this one was a little more advanced kind of play, because I like to follow it when you have that steel goes up above that 13.5, it's effectively coming up underneath. But then as soon as it turns down, what you're looking for is a cross of the steel below cyan that is like a trigger cutoff. And that's exactly what happened here. And that was the suggestion that you were going to begin to fade, particularly with, even if you were just following the shakeout, you could have followed it from as soon as it broke down below the yellow line here. And that took place much earlier. But just following that takes you all the way to where it ended up with the new buy setup. And that brought exactly right back to, it's amazing how you follow these, right back to the 50%. And the exact same thing. Same particular setup. Now, in this particular case, you didn't have cooperation of the shakeout. I'm really not interested too much in shorting into rising shakeout, even though at that point it had gotten flat. But it's just a couple bars later that it finally dipped out, and it's like right over here where this little yellow line, a little white line that I kind of trailed it to show. And that just broke back down to the lows again. And that one tended to carry a little bit further every time. This is a classic short run to the 50% to the low, 50% to the low. So our next move back for these would be a move back up to the 50% off one of these buys, but still hasn't proven that it can break that at this particular point. So still trailing that setup lower at this particular point. And this is kind of a normal for month-end situation, people taking the gains and returns off of another fairly decent month from a return standpoint. Yes, we had the big collapse that started it, and we're going to finish below for the overall month, but from a recovery standpoint, pretty darn dramatic from the depths of that move, all within a 1 month period. So yes, you had the dramatic January pump, dramatic decline in February, but most of it has been bought back up for the time being. So it wasn't too catastrophic. As always, though, I will continue to put up things. We had a lot of nice charts there for that 5K to go through some of these setups and follow it along. I'll be sending out indicators middle late part of tomorrow, so be ready for those. And as always, trade well.